Welcome to The Explainer. So today we're going to dig into one of the most powerful strategies for navigating the chaos of the markets, trend following. It's this amazing idea that really connects the legends of the past with the super data-driven traders of today. Okay, let's just jump right in with a story. Picture this, it's the early 20th century. You find yourself at some fancy dinner party and you somehow end up sitting right next to Jesse Livermore, the guy, the most famous speculator of his time. So you lean in, right? You ask him for that hot stock tip, the one that's going to make you rich quick. What do you think he says?
His answer? A blunt, I don't know. Now, he wasn't trying to be rude or evasive. That answer is the core of his entire philosophy. It's the big idea that separates the amateurs from the masters. See, the best traders don't predict the future, they react to the present. And if you can really wrap your head around that simple phrase, you've got the key to a whole new way of thinking about the markets.
First up, the boy plunger's game. Our story really starts with this near mythical figure, Jesse Livermore, a guy who made and lost absolute fortunes, all starting with $1,000 he earned when he was just 15 years old.
For him, speculation wasn't just gambling. No, it was a serious business. He saw it as this fascinating game, but one that was won not by the lazy or the emotional, but by people with incredibly sharp minds, almost inhuman patience, and just total mastery over their emotion. So that brings us to his rules. Over his incredible 40-year career, Livermore forged this set of timeless principles. And these weren't some academic theories from a book. These were rules paid for with millions and millions of dollars in both profits and, yeah, some really painful losses.
This quote, right here, it sums up his entire approach to risk. Winning trades, he believed, well, they just take care of themselves. You just got to let them run. But your losing trades? Oh, they will absolutely destroy you if you don't act and act decisively.
And all these rules, they really boil down to one single job. You have to be your own insurance agent. You've got to protect your capital. Cutting your losses quickly, that's what keeps you in the game to trade another day. And on the flip side, he warned that averaging down, buying more of a stock that's already failing, was a fatal, fatal mistake.
But look, Livermore wasn't perfect, not by a long shot. And he learned his own lessons the hard way. His famous million-dollar blunder in the cotton market is just a masterclass in what happens when you let impatience and emotion take the wheel.
He was totally convinced cotton was about to make a huge move up, so he broke his own rule and jumped in early, without waiting for the market to confirm it. He got impatient with how slow things were moving, tried and failed 5 times in just 6 weeks, and ended up burning through almost $200,000.
So completely disgusted, he just gave up. And then just 2 days later, the massive move he'd been waiting for finally started. By breaking his own rules, he not only lost a small fortune, he missed out on this, a cool $1 million profit.
Okay, section 3, the pivotal point. So if impatience is the ultimate enemy, how did Livermore ever know when the time was actually right to make a move? Well, he waited for a very specific signal he called the pivotal point.
Now, pivotal point isn't a guess or a prediction. It's an observation. It's a key price level that the market itself has to confirm. So when a stock breaks through a huge resistance point, or maybe it hits a new all-time high with a lot of volume, that's not just a number. It's a signal. It's the market telling you that the underlying forces have shifted and a major trend is probably kicking off. Let's look at a real-world example. His famous 1915 trade in Bethlehem Steel. He didn't buy it at $80 or $90. No way. He sat on his hands and waited until it decisively crossed that pivotal $100 mark. Then he bought. And what happened? Just 5 days later, the stock hit $155. He let the market prove him right, and man, was he rewarded for that patience.
Section 4, from art to science. You see, Livermore was truly an artist. He operated on this deep intuition that was sharpened by decades of experiences, both good and bad. His genius was this finely tuned sense for how the market behaves.
And that brings up the big question, the one that moves us into the modern era. Can you take the hard-won wisdom of a lone genius like Livermore and actually transform it into a disciplined, repeatable process that anybody could follow? This is exactly where the art starts to evolve into a science. If Livermore was the artist, then modern trend followers like Michael Covel are the scientists.
They take Livermore's core ideas, cut your losses, let your profits run, and they build them into a verifiable, rule-based system.
And this modern science, it starts from the exact same place as the old master. Like Covel says here, the basic approach is that nothing is predictable. It's really just the scientist version of Livermore's I don't know. It's an admission that trying to forecast the future is a fool's game.
So, now we're at Section 5, the modern trend follower. How does this modern approach actually turn Livermore's wisdom into a concrete, working system?
Well, at its heart, trend following is dead simple. If something is going up, you buy it. If it's going down, you sell it short. It completely ignores all the news, all the expert opinions, because the only thing that tells the truth is the price. The whole strategy runs on one core belief. A trend that's already in motion is likely to stay in motion. So instead of just going with your gut, a modern trend follower builds a super precise system by answering these 5 questions before a single dollar is on the line. What markets will I trade? How big will my positions be? When do I get in? Crucially, when do I get out if I'm wrong? And when do I take my profits if I'm right? By having all those answers locked in ahead of time, you basically short-circuit your emotions. You take impatience, Livermore's greatest demon, right out of the equation.
And the result is incredibly powerful. Because the system can make money from falling prices just as easily as from rising ones, it has historically done really well during major crises. I mean, think about it. When traditional portfolios were getting crushed during the dot-com bust or the 2008 meltdown, trend-following systems were often delivering huge profits. Which brings us to our final section. Price is the only truth. This is the one powerful idea that ties the lone artist from the 1920s to the data scientist of today. It's this quote right here. It's everything. Livermore knew it, and Covel built an entire science around it. The market, through its price, is the final judge. Your opinion, my opinion, the opinion of that so-called expert on TV, they're all worthless. They mean nothing unless they are confirmed by the trend of the market itself.
In the end, this whole idea, trend following, it isn't just about markets. It's a mental model for dealing with an unpredictable world. It teaches us to stop guessing, to listen to what's really happening instead of our own opinions, and to act on what we see, not what we hope for. It's the simple yet really profound art of disciplined reaction.